Welcome everyone back to Shine's Room. Got a little Nick's 1994 introduction music. That's what it's about. What's up everyone? May I please have a mic check? And right there, can I get a webcam check please? All right, ladies and gentlemen, it's kind of a weird day. I wouldn't consider this, when I look at the overall day, very expected move. Come on, really? Are you guys really bullish overall on the big picture? And define what your big picture is, because we're just going to take a look at the markets right here, and you just see exactly, just, breaking through the triangle wedge support level right now. You are entering the gap through 61.68. If you can get to those levels are just 12 cents away. Those are very critical support levels for your triple Qs. But enough with that. Let's talk about what a divergence play is today. And we're going to give a little education here in Shine's Room. Just a little treat for you guys. And of course, we always try to deliver top-notch content. So I hope you guys enjoy this presentation, obviously. So let's just go into what is a divergence. What is a divergence? I mean, everybody can define the word. It sounds easy, but what is it in terms of what we're talking about here? A divergence is when the price of your asset, of an indicator or index or any other related asset move in opposite directions from each other. So in technical analysis, traders make transaction decisions by identifying situations of divergence where the price of a stock and a set of relevant indicators, whether you're using a market indicator as a whole, whether you're using stocks within the same sector as an indicator, which we were able to do today in some of these names, where the price of a stock and a set of the other relevant indicators start moving in opposite directions. Instead of correlating with each other, which we love to find correlations within the stock, all of a sudden you see a divergence. So this is what you basically do when you're trying to spot a divergence. You take a look at stocks that relatively move with each other, that all of a sudden start going in opposite directions. And again, we were very tuned into the Obama healthcare. I just broke it right down to a 1-minute chart here, and that's when I brought it to the room, literally 3 minutes before it actually exploded. But when you look at this chart right here, you take a close look at the time frames of UNH and THC. I showed UNH in the green and red bars, and THC in the yellow and blue bars. And what you do see is you see UNH right now spiking up high. That's a 1-minute chart. You see, UNH basically in 3 minutes jumped $1.50. Yes, we're talking heavy volatility, heavy volume coming in. But what happened? Tenet Healthcare was ignored. You know why we asked for all the comps? You know why it was great, April? Great job, brother, man, giving all those great comps out today. Because what happened was, you have to realize, what are most traders doing? And what I did is I delved into the psychology. So to get conviction from psychology is always a good thing if you could add it on with technical analysis. So what was the psychology? That traders like you and I are just sitting on their chairs, just trading the markets here, and they're saying, the Obama healthcare bill's coming out soon. What names can I trade? All of a sudden, these little names April's talking about, this is not on anybody's radar. Are you kidding me? They're watching the UNH. They're watching the major healthcare names. They're not watching these little ones. And what happened? I thought Tenet Healthcare was a pretty major player. And what I saw here was I saw literally UNH spike up $1.50 while Tenet Healthcare pulled down a nickel. So it was approaching 1-minute support levels right there on the THC. And we could just see exactly what happened next here as the chart panned out. What happened was literally after pointing that out, 1, 2, 3 minutes later, all of a sudden, THC spikes in volume because it tries to play the healthcare play. So what I did was, instead of jumping in these big names, which I know every single trader is watching, I'm waiting to see the initial reaction of what the Obama healthcare plan is doing, followed by seeing if any of the stocks haven't reacted yet. And that is such a big point when you see something like this. The volume was low. I mean, I'm looking at that candle. I mean, I did that's where I was buying on that, in that tiny little red candle, slamming shares on the offer. And then all of a sudden, out of nowhere, just pulls down, and then boom, like a rocket ship, explodes out here to the upside. I did get a little ecstatic on the trading broadcast here because let's say, just to catch a divergence play like that, it's just absolutely phenomenal. And down at those levels, if you were trying to get, 10, 20, 30, 40, 50,000 shares, it was definitely attainable before that spike out even happened, where you obviously busted through 1 million shares almost on the 1 minute candle, as other traders identified it late. So the fact that we were able to identify this Tenet Healthcare was just an absolute phenomenal call. So remember, when you're looking for divergences too, a good thing to do is to look at stocks in the other sectors. So let's just take it real simple here. Let's just say I wanted to trade Intel. Very slow, modest stock. Has its moves, fun to add liquidity if you know where the boxes are pushing. Very hard to shave because they shave within tenths of a penny of each other, and I don't want to get into that right now. But what you do see is, let's say I wanted to trade Intel, but all of a sudden I see, for example, Microsoft, MSFT, which I will denote here by yellow and blue bars. And the ability to overlap charts is a very crucial tool in a charting software. Any charting software you have should allow you to overlap charts. So you see right here, just for the example's sake, you see right here, obviously Microsoft and Intel do move in tandem with each other. They have a very high correlation rate. There are times where, Intel moved up higher than Microsoft did, but they were still almost always going in the general direction, at least 95% of the time, and probably higher than that. So you take a look at a chart like this, and you just see the obvious correlation here. Now imagine for a moment, and I'm using this as an example to just use it, in your head. Imagine for a moment right here that you're looking at this chart, and all of a sudden you see Microsoft exploding to the outside, and Intel drops a few cents. If you see a play like that, you bet on one or both things, and those two things are either Intel's going to catch up to Microsoft and at least start trying to push higher because they do move in tandem with each other. Or you could think, I think I want to short Microsoft potentially and go long Intel potentially to see if they start trying to go towards each other's on a technical time frame. So when you think about it like that, when you're looking at the healthcare sector and these various healthcare names, you have to know the sectors of the stocks you are watching when you're trying to get a good idea. So for example, one of the first things that happens, let's say I see Apple shooting up. You know what my brain tells me? What are the triple Qs doing? Are they hitting day highs? Did Apple just try to diverge from the triple Qs? Likely not, but that's where my eyes go. The Qs should be trying to potentially hit day highs. Now I'm trying to break overhead resistance levels that I have from the Qs. Now they have the psychological conviction of the divergence happening. Now all of a sudden I'm looking at resistance levels at the Qs. Now I'm looking for the Qs to potentially break up. Now I'm watching the support levels of the Qs. Now I want to go long on the support level with a tight risk reward for a break to the downside, maybe interpreting a perfect storm scenario. Maybe that's what I want to do. And when you start thinking like that, it's more of the mindset that it will start helping you approach these trades in a more intelligent manner. I absolutely murdered Arna today, and I'm just sitting here just waiting basically waiting for the RIM earnings to happen, maybe some more news, some more stocks, some more setups, and you could see what happened right now. UNH, very, 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 very tight right now. Technically speaking, that is not a bull flag formation. I would just call it an ascending channel at this point, and I want to show you guys exactly why I feel that way. Not only does Mark communicate with me about his feelings, he listens. Oh, you think I never heard that before? So, taking a look here at UNH, take a look at this 5-minute chart. You put in the big spike up, the big spike down, and then the big spike up on more volume. So since the up move did have more volume, there was more bullish volume, you look for a flag pull to the bull side. Now, one would argue that it digested here, started breaking down this flag. The flag is nullified, and now it's just moving in a beautiful ascending channel. And there's many lines you draw for this channel, and each one of them should at least be recognized as the stock is approaching on those levels. And all you have to do is just simply practice your channels. We talked about it in education. Just keep drawing your lines. You're going to get better. Look at that beautiful little falling wedge right there for the beautiful little pop-up. Okay, it went up 30 cents, but look what a simple, easy trade things like that are when you start noticing them and you start being proactive and start drawing things on your chart. So I know I do it very fast. It was from years of doing it, but you know what? I'm a broadcaster watching 200 stocks doing the same thing. You guys, you can pick 1, 2, 3, 4, whatever you guys do, that's what you're looking for. So the time that you start drawing these lines is the time that you change your career. The time that you start noticing divergence planes and adding psychology behind your technical analysis, that is what makes you the master trader. That's what eventually will make you the absolute best trader that you can be with your style. So this is a never-ending learning process. It just takes one thing of changing that maybe you weren't willing to do or that you didn't believe in for whatever reason, and you never did it, and this thing was working all along. And that's exactly how I feel about drawing these channels. I should have been drawing these things when I was 6 years old, instead of running around in the sandbox. Sound is awful. Anyone hear me? Fine now? Okay. All right, guys. So again, just hope you enjoyed this presentation on divergences and whatnot and how to look for them. You're basically, again, you're looking for the same stocks within the sectors to move from each other. Let me pull up the chart right over here, and that's exactly what you do. You're looking at 2 healthcare names, right? You could see even in the morning. See how they're even trading for the day. You see how it's very obvious right there in the morning how it just moved up, digested, and then what happened to THC there in the yellow and blue? Why wasn't it able to push out? And that was your golden opportunity right there. You had a 4 or 5 minute time frame window to notice it happening, and if you were able to capitalize on a play like that, you could have hit a home run out of the park, just like I did today. So I hope you guys enjoyed this presentation, and if you guys have any questions, now would be